fun. We're back at the bottom. Those are some images from last weekend. We had a great, wonderful weekend, family weekend. We had friends over. Wonderful time. Hope all you guys had a great weekend as well. As we come into the new week, there's a bunch of stuff to look at. I'm looking at silver and gold ETFs and alike. So want to go through this with you guys. Let's go look at the charts. Okay, so now before we look at silver and gold ETFs, where I think the intermediate or at least the immediate term rally is probably overdone, let's get a little bit of context. We have US equities as far as S&P 500 goes still holding up in the bigger sense, but you see a lot of indices even in Germany here. You can see we're seeing renewed weakness, just making a series of lower highs. You can look over in Italy where the banks are having major issues. You can see those indices really looking very weak. So bond yields continue to go lower. And that environment absolutely is positive for something like gold and silver. But like any asset, gold and silver ultimately does have to pause a little bit in order to go back higher. And I think there's an opportunity here, particularly in the SLV ETF, which represents silver. So let's have a look at this real quick. If we just kind of zoom out a little bit, we can see, and I'm going to make this a plain white chart and in white chart like this, and make it weekly. And you can see what's taken place here is very much the same thing we've seen in gold and GLD ETFs and all that stuff. Very much us breaking out of this sort of pattern we had, or this sort of downtrending range. That's been a very meaningful move to the upside. Now, and I do think this ultimately can continue, particularly if yields remain this low in the bond world. Now, if we look a bit closer and just take into consideration some near-term moving averages, 8 and 21-day moving averages on the daily chart, the SLV you can see is once again getting very extended above those 8 and 21-day moving averages, and that is a pretty good initial indicator that something has probably overextended itself for the near term. You can then overlay something very simple, which is what I like to do, like a MACD, and you can see MACD, which is just a basic oscillator. Tells you sort of how far removed the stock is above its certain moving averages, and I think this is very parabolic. So there's certainly, in my opinion, a trade to do here. I think selling out of the money call spreads, if I look at the implied volatility tables on the SLV, there's plenty of implied volatility that's coming in that market. So to me, this is something worth considering. On the short side, if one wants to be more aggressive, one could just outright short the SLV or buy some cheap dated puts if you can find them in the SLV for a mean reversion move back into let's call it the $17 area or so. 4th of July.
4th of July.
And we're having some beers.
They're
We'll raise some beers. There you go.
Cheers.
Thank you, Sarah.
Cheers.
Thank you, Sarah.
Good to have you guys.
Cheers.
Thank you for having